Good morning, friends. This is Kaustubh from Fundamental Desk. We have released quarter 4 earnings preview on FMCG sector. In terms of performance, we believe that this in quarter 4 we would continue to see pressure on the sales volumes of the FMCG companies. This is mainly on account of bleak macro environment and inflationary pressures which have continued to put toll on the consumer sentiments. In quarter 3 we have seen that daily consumption items getting impacted because of the inflationary pressures, and there were moderation in volume growth in some of the key FMCG companies like HUL, Marico. We believe that that pressure is going to continue in this quarter as well. We expect HUL's volume growth to be around 5% in its consumer business. For Marico, we expect that its Saffola edible oil and Parachute would clocking volume growth in mid-single digit, mainly because of its high premium over the other brands available in the market. For GSK consumers also, we are expecting around 7% volume growth in the MFD segment. For ITC, in its cigarette business, we expect improvement in the volumes on sequential basis. This is mainly on account of fact that traditionally we have seen that after 2 to 3 quarters, volumes pick up in the domestic market, and I think that is the main reason because of which we believe that there would be slight improvement in the sales volume in quarter 4 of ITC's cigarette business. But for overall the FMCG universe, if we consider, we expect revenue growth of in mid-teens to high teens, and that would largely be driven by mix of volume and value. However, we believe that the revenue bottom line growth for the FMCG companies would be higher than what the revenue growth would be, and the key reason for that is we expect in this quarter margins to improve, largely on account of decline in the raw material prices. Now the key commodities like palm oil, rice bran oil, or for that matter even copra is lower on year-on-year basis. In fact, copra has been stabilized, palm oil is down by around 30%. Other key inputs like caustic soda flakes, which is used mainly in detergents and soaps, then even your sunflower oil and curdy oil, which has been used in branded edible oil space. Now these prices have also stabilized on year-on-year basis. Even milk powder prices, if you see milk and milk powder prices on YOY basis, there might be some kind of a stabilization, though they have currently picked up. But we believe that this is going to help for the FMCG companies, considering the fact that improvement in their revenue mix, also the better realization would add on to the gross margins. So overall, from gross margin perspective, we expect improvement on year-on-year basis. In terms of operating margins also, we expect companies to post better operating margins in this quarter. So overall, we expect the bottom line growth of the FMCG companies to be better than the revenue growth in quarter 4. That would also be aided by higher other income for most of the companies such as HUL, ITC or Bajaj Corp for that matter, which has strong cash on their books. So in terms from company specific, if we consider, we expect the biggest like HUL to post revenue growth of 12% and bottom line growth of 20% for the quarter. For ITC we expect the revenues to grow by around 18% and PAT to grow by around 17%. For Marico and GCPL, though these companies are expected to do well in terms of operating profit growth, but we believe that in terms of PAT there might be some kind of moderation in comparison to what the operating profit growth is expected. We are expecting GCPL to post a PAT growth of 13%, which is after the exceptional item and the minority interest, which is low, which would be kind of lower than the operating profit growth of 19% expected for the quarter. For Marico, we expect improvement in the gross margins to be slightly kind of a flat. However, we expect operating margins to improve by about 100 bips, largely on account of fact that we expect that advertisement spends for this quarter would be lower on year-on-year basis. So operating profit would be higher on YOY basis by around 25%. Because of that, we expect, however, due to the higher interest cost, we expect PAT to be, PAT growth to be around 14% for this quarter. Bajaj Corp would be the would be the highlight of the quarter, where we expect strong top line growth of around 27%, and we expect bottom line to grow by 38%, largely on account of decline in the vegetable oil prices, and even the LLP prices are lower on YOY basis, which will help Bajaj Corp to show improvement in the margins. So overall, Bajaj Corp is expected to post strong performance. Even Zydus Wellness would be posting a decent growth in terms of revenues and bottom line in this particular quarter. Overall, Sharekhan FMCG universe, we expect revenues to grow by around 15% and PAT to grow by around 18%. In terms of outlook, we believe that quarter 3 we have seen the moderation. We expect it to in volume growth. We expect it to continue in quarter 4 as well. Though companies have taken slews of actions in terms of taking a decline in the prices of key SKUs, or offering discounts or promotional add-ons on some of their key brands. But this is going to we will start seeing the results of this particular activities from quarter 1. So Q1 performance of the FMCG company has to keenly monitor, and if there is going to be some kind of moderation in the inflation, or if we see improvement in the macro environment, I think you will start seeing improvement in the volume growth of the FMCG companies. But I think we have to consider one positive is that the companies did not stop on their renovations or innovations. They have been consistently adding products in their portfolio, which is kind of a strategy from the longer term perspective, because they want to improve their growth prospect from the longer term point of view, because we believe that consumer growth story of India is intact. So that has to be considered positive. In terms of topics, we continue to maintain ITC as our topic, mainly on account of its strong balance sheet and decent upside from the current level. In mid to small cap, we like Bajaj Corp mainly on account of its strong performance for past 6 to 7 quarters, its strong balance sheet, and there is a likelihood of acquisition which company has been talking for a long. So because of that, we like Bajaj Corp in the small to mid cap space. Thank you.